Okay, so let's have a look at the incomplete records for 2013, question 7, E. Kelly, type A, 100 marks, and it's a past exam paper. So remember the 8 steps that you need to do before you do step 9 and 10, which is preparing the profit and loss account and preparing the balance sheet. So step 1, prepare a statement of capital. So we're looking for a goodwill. Prepare 2 control accounts, your debtors and your creditors, trying to calculate what are your credit sales and what are your credit purchases. Prepare cash in your bank account to help you calculate your cash sales and your cash purchases. Calculate your total sales, which is your credit sales plus your cash sales. Calculate your total purchases, which is your credit purchases plus your cash purchases. Adjust for any loans and investments in the questions. Adjust for other expenses and gains, and make adjustments for drawings. And then step 9 and 10 is complete the profit and loss account and complete the balance sheet. So the workings for this one, step 1, prepare a statement of capital, so your goodwill. So to start your question for type A, you'll be given that you've purchased a business for a certain amount of money, and I'll give you a list of the following assets and liabilities that you have. So you make a list of your assets, you make a list of your liabilities, you take them away from each other, and the difference will be your goodwill. So in this question, we've got our assets of premises, 174,000, we've got stock, 14,300, we've got debtors, 14,000, we've got 3 months insurance prepaid, 430. It's just going to make a list of each one of those 4 and add them up. Then your liabilities are going to be made up of your trade creditors of 17,200 and your wages due of 1,200. So just add those 2 up, and that's going to give you your total liabilities. So you can take your liabilities away from your assets, and you're going to get how much the business was worth of 184,330. The amount we paid was 205,000, so the difference is known as your goodwill. So you're going to take your 205,000, take away 184,330, that gives you 20,670. That's your goodwill, and it goes in your balance sheet as a fixed asset. Step 2 then is to prepare your 2 control accounts. That's going to be your debtors control account and your creditors control account. So your debtors control account, we're going to look for any debtors at the start of the question, any debtors during the question, any debtors at the end of the question. So you see here, at the start you've got debtors, 14,000, it's an asset, so go on the debit side. We have a look during the question, we got bank lodgements, debtors of 32,000, so the paid is 32,000, so it's going to reduce the asset, so it goes on the credit side. And then at the end then, we got debtors of 16,000. It's a closing balancing, or closing balance, so it goes on the credit side. And then 16,600 comes down to your opening balance for the next one. So on the credit side, we have 32,000, 16,600, which gives us 48,600. We only have 14,000 on the debit side, so the difference between the 2 is our credit sales of 34,600. Your creditors then, same again. To start, 17,200, it's a liability, so it's on the credit side. Anything during the question, we have creditors 34,200, so that's going to go on, reduce the liability, so it goes on the debit side because we've paid it. So 34,200, and then the end we got 14,300. Remember, that's our balancing figure, so it goes on the debit side, can be brought down to the credit side to start off the next period. So on the debit side we have 34,200, 14,300, so you got 48,500. We only have 17,200 credit side, so the difference between 48,500 and the 17,200 is our credit purchases, which is 33,300. Our next step, number 3 then, is prepare your cash in your bank account. So that's where we're going to look over here at our cash and our bank payments and our bank lodgements. So have a look to see if you've got any opening cash to start a question, which we don't. So now the lodgements have lodgements, general expenses and purchases. So those 4 are going to go in as they are. So lodgements 94,000, general expenses 22,500, purchases 51,000. Always have a look to see if the proprietor has taken any stock or any cash for their own purposes for drawings. Here we've got stock of €80 per week and €60 per week of household expenses during the year for cash. So you can take 60 multiplied by 52 gives you 3,120. So your drawings will be 3,120. And then have a look at the end of the question to see if you have any cash left over. Only 550. So 550 just goes straight in. So you're going to add all these up. And we add them up, we get 171,170. We don't have anything on the cash side, so our cash sales is going to be 171,170. And your balance figure is going to be brought forward. It's going to be your cash for your balance sheet. Your bank then, you're going to look at your bank. So you've got bank payments and bank lodgements. So bank lodgements, debtors, cash and dividends. So you've got debtors, cash and dividends. In this question, we'll just have a look at the loan down here. It says Kelly borrowed 72,000 on the 1st of 7, 2012, part of which he used to purchase an adjoining warehouse costing 60,000. That's all it says. So we have 12,000 left over. So that's 12,000 just goes straight into our bank as a loan. We just leave it there until we spend it. For our payments then we got equipment, 30,000, creditors, 34,200, light and heat, 4,600, interest, 2,400, insurance, 3,000, standing order, 2,500, van, 32,000, rent, 22,800. So you're going to add all the credit side up, add all the debit side up, find out what the difference is. So the difference here you have is 10,100. And that's going to be your balance, which we put into the balance sheet as your current assets. Step 4, calculate the total sales. So your total sales is where you take your credit sales, add your cash sales. So in the question, we calculate our cash sales, 371,170, because any money we have, we usually use that money to, or the money we get from sales, that's what we use to pay our expenses. So that's why these expenses are paid from the sales that we've actually generated in the business. So our cash sales is going to be 171,170. And our credit sales then from step number 2, it's going to be 34,600. It's just going to add those two together. So 171,170 for your cash, 34,600 for your credit. So your total sales, 205,770. And that goes into your trading. Your purchases then. So once again, go back up here to step 2 and step 3. So you purchase it here for cash of 51,000. That tells us in the question over here. The cash purchases then are part of step 2. We do the creditors control account, that balance figure of 31,300. So those two are added together to get your total purchases. So you're going to get 51,000 plus the 31,300 gives you 82,300. Drawings then, so always have a look to see, so to take any of the stock for personal use. It takes €80 per week of stock, so 80 by 52 into your drawings, which is 4,130. So that's going to reduce your total purchases to 78,140. Your next step then, number 5 or number 6, adjust the loans and investments. So we have a loan in this question. So the loan we got was Kelly borrowed 72,000 on the 1st of 7, 2012, part of which was used to purchase an adjoining warehouse costing 60,000. It was agreed that the sum borrowed would be repaid in 12 equal installments over 6 years, period commencing on the 1st of January 2013. Interest was to be charged at a rate of 10% per annum and paid monthly. So the amount, 72,000. The rate of interest was 10% per year, and we have it for 6 months because we bought on the 7th of July. So we got 7, 8, 9, 10, 11, 12. So it's going to be 6. So the interest is going to be 3,600. That's your expense. We paid 2,400, so up here in our payments we have interest 2,400. So we're due to pay 1,200. That's going to be your liability. Then in your loan repayment, we're going to find out, so it's going to be 12 equal installments. So I'm going to find out how much you want to pay per year. So it's going to be 6,000. But he wants to be paid within 6 years. So if we use 12,000 per year and 12 equal installments, that's going to be 12 years. But he wants it done in 6. So we have to have 2 installments per year. So what's due to be paid is 12,000. Okay, it's period commencing the 1st of January. So this 12,000 is your loan repayment due, which will be your balance sheet. And then we need to reduce how much is going to be repaid for your finance by section. So 72 minus 12 will give you 60,000. So that's how much will be left after we pay this 12,000, because the commencement is going to be starting on the 1st of January 2013. So we need to have that money ready to go at that time.